this article, we're going to be talking about the basics of the Forex market. Now, the Forex market, or foreign exchange, or FX, or sometimes referred to as the currency market, is a global exchange for international currencies. It is these markets and the buying and selling of exchange pairs, otherwise known as currency pairs, that determine the valuation placed on worldwide currencies. Now, obviously, there are many factors that determine whether a currency's value increases or decreases. For example, the demand of one currency can mean there is demand for products or services from that country of origin. Some currencies are also purchased and held in reserve, usually the US dollar, the UK British pound sterling, and the Swiss franc. Certainly, if that currency value is placed at a low from its normal historic average, it is usually common to see an increase in buying currencies at lower historic values, as this helps those that are looking at international trade to secure a better price for importing goods and services from the currency's country of origin. Large corporations do this to maintain price consistency with manufacturing, etc. Now, the foreign exchange market is the largest financial market in the world, with an incredible average daily turnover in excess of $4 trillion per day. Now, this is increasing almost daily as the FX market becomes more popular, not just as a means of intermarket global trading, but as a form of speculation amongst those trading the market. In fact, there has in the last 10 years been an enormous boom in retail trading in the Forex market. Certainly the last 5 years, this area of speculation amongst traders has grown to never seen before levels of trading and interest. The attraction being the markets are highly liquid. It's open almost 24 hours per day, and that it's a market that is seen as a trending market, going in one direction or another for quite lengthy periods at a time. Now, most trade the Forex market do so on very short-term basis, days at most, rarely weeks. Some trade intraday, where they have positions that are open for hours, if not minutes. Now, the list of those trading in the Forex market is one of the most varied of any of the financial markets. We have central banks, currency speculators, international corporations, governments, institutional investors, large banks, retail investors, as discussed, and basically more information on the market participants will be added more in other articles as I write them. Now, the main centres of trade in the Forex market are the UK, which accounts for over 36% of Forex transactions, followed by the US coming in around about 18%, and Japan coming in third, accounting for just over 6% of all Forex trade transactions. Now, transactions in the Forex market have more than doubled in less than 10 years. At the time of writing this in 2012, given its ease of access for retail traders and the growing demand for international trade and international speculation, this is unlikely to fall anytime soon. Now, one of the unique things with the Forex market is that there is no centralized hub for clearing transactions. Say, as we have become accustomed to see with the stock markets, we have main exchanges in leading major cities such as London and New York, for instance. Now, this is because the Forex uses what is known as over-the-counter or OTC trading, which allows for a number of interconnected markets from all over the world where different currency derivatives are traded. Now, there simply is no single exchange for the currency market, although some countries, as detailed previously, are becoming known market trading centres in Forex, namely London, New York, and Tokyo, simply because of their dominance in the amount of trading taking place in these major cities. Because of London's dominance overall, it is usually the London quote on currency that is provided worldwide. Now, currencies are traded in pairs against one another. The main currency pairs are as follows: the Euro-US dollar, the US dollar Japanese yen, the Great British pound, and the US dollar. The first currency quoted in the main currency is the main currency converted into the following currency. For example, we have the Euro-US dollar. Now, in this conversion of €1 to $1 US, therefore, if you expect the price of the euro to increase against the US dollar, you would go long. If you want to know what long and short means, we have a tutorial on Financial Trading 101. So you would go long on the euro US dollar. Conversely, if you expect the dollar to increase in value against the euro, you would go short on the euro US dollar. Now, quotes on currencies are given as follows. We have 1.5432, which is an example, which is $1.54. Now, and 32 fractions of 1 cent, 100 making a whole cent. Now, a single move in that is known as a pip. Now, given the Forex markets are incredibly liquid, trading is instant, almost, and some currency pairs at certain times can be incredibly volatile. Now, this can mean massive movements in pips, meaning that it is possible to make large numbers of money, and also equally large losses as well. What is interesting is that the US dollar was used as a basis for a currency quote in over 84% of transactions. Now, in further articles on financialspreadbet.com, I will cover some of the thinking behind what makes the Forex market move and what drives this. I will then provide trading tutorials on trading the Forex using financial spreads, as well as a good assortment of techniques and methods that you can use to benefit from trading in the Forex. Also, if you're interested in trading the Forex market directly, we'll be also producing a separate website focusing just on the Forex market, and this will come in time. But for now, for those of you interested in Forex, I would in fact advise that at first you start trading using an easier to understand product, such as financial spread betting, rather than jumping straight into the Forex market, certainly if you're new to trading. Now, the important thing to understand is that to learn about trading, you have to start by learning the market you are entering, learning the product that you're going to use to trade that market, and then start to develop skills in trading that market using technical analysis, all of which you will find on this website. Then when you have become proficient in trading using financial spreads in the Forex market, then and only then think of moving directly into the Forex market. Now, one final note to my American cousins. Sadly, you are not able or allowed or legally allowed to trade in the financial spreads in the US, which is unfortunate. However, if it's strictly the Forex market that you want to become involved with, then you can still use the same methods and the techniques that I'll cover in this website. Just make sure that you use a demo account so you can get a good feel of how things work. There will be more information on the best places to open a good demo account, which are free and will be covered in another article soon.